Welcome back to Degens Journal, your no-fluff, high-signal crypto update for serious Degens. If you missed the daily briefings, don't worry. These are the 5 most important stories that shaped crypto this week. From corporate Bitcoin moves to Musk trying to rewrite history, literally, let's dive in. Headlines: Strategy buys another $26 million in Bitcoin as the market dips under geopolitical pressure. Cardone Capital enters the game with 1,000 BTC and wants 3,000 more. Ethereum whales drop $100 M+ leveraged longs after the US strikes Iran. Bitcoin treasuries are the new alt-season, says Adam Back. And Elon Musk wants Grok AI to rewrite human knowledge from scratch. Let's break it down. Story 1. Strategy buys the dip. $26 million in BTC added. Michael Saylor isn't just tweeting laser-eyed memes, he's putting millions on the line. Again. Last week, while geopolitical tensions between Iran and the West triggered panic in the markets, Strategy, formerly MicroStrategy, did what it's become famous for: buy Bitcoin when others are scared. The company purchased 245 BTC, spending over $26 million at an average cost of $105,856 per coin, according to a new SEC filing. And here's the twist. This buy came as BTC dropped below $99K, the lowest level in weeks. While others were selling into fear, Saylor was accumulating with conviction. It's consistent with his long-term thesis. Saylor isn't here to trade, he's here to outlive fiat. He's even projected Bitcoin reaching $21 million per coin within 21 years. It sounds outrageous until you realize he now oversees over 582,000 BTC on Strategy's balance sheet. Why does this matter? Because while Wall Street still debates if Bitcoin is too volatile, Saylor's already turned a software company into the largest BTC treasury vehicle on Earth. His playbook is simple. Use convertible debt and equity raises, buy BTC at scale, hold through every storm, educate shareholders on the long-term upside. This week's $26 million purchase isn't a flex, it's a signal. He's not shaken by war, he's front-running monetary instability. Story 2. Cardone Capital buys 1,000 BTC, plans for 3,000 more. This one caught a lot of people off guard. Grant Cardone, the real estate mogul best known for selling high-yield multifamily investing to retail investors, has now gone full degen corporate style. His firm, Cardone Capital, which manages over $5.1 billion in real estate, just made its first major crypto treasury move. 1,000 Bitcoin purchased, worth around $101 million, plans to add 3,000 more BTC by the end of the year, and in his own words, "We're combining the 2 best-in-class assets, real estate and Bitcoin." It's not just a treasury play, it's a branding pivot. Cardone Capital is now positioning itself as the first real estate crypto hybrid investment vehicle, aiming to attract both real asset investors and digital asset bulls. Why does this matter? Because this bridges 2 markets that rarely talk to each other: traditional real estate, steady cash flow, inflation hedge; Bitcoin, scarce digital asset with asymmetric upside. By holding BTC on its corporate balance sheet, Cardone's firm could hedge against fiat debasement, attract crypto-native investors, differentiate from legacy REITs, gain exposure to Bitcoin without launching a crypto fund. The move also places Cardone Capital ahead of mining giants like Cipher Mining and Core Scientific in terms of BTC holdings, a major power statement for a non-crypto company. And here's the strategic angle. Real estate returns are slowing under high interest rates. Cardone is clearly betting that Bitcoin will outperform cap rates over the next 5-10 years. It's not just an investment, it's an identity shift. Are we about to see more non-tech, non-financial companies adopt BTC for balance sheet diversification? This might be the blueprint. Story 3. Ethereum whales go big after US-Iran strike. Just as global markets flinched following US military action in the Middle East, one Ethereum whale saw opportunity and made one of the boldest bets in recent memory. According to blockchain data from Hyperscan, A single wallet opened a $101 million leveraged long position on Ethereum using 25x leverage with an entry price of $2,247. Let's break that down. That's over $900,000 in unrealized profit at its peak. But here's the kicker: the trader has already paid more than $2.5 million in funding fees. And if ETH dips below $2,196, the entire position gets liquidated. This isn't just risky, it's high-stakes conviction at a time when most market participants are watching from the sidelines. Why is this significant? Because it shows that while retail is nervous, smart money is betting on a reversal. This whale isn't just hoping ETH recovers, they're leveraging macro fear as fuel. In times of geopolitical instability, risk appetite usually shrinks. But here, we see the opposite. An aggressive move that suggests institutional confidence in Ethereum's resilience. Let's also remember, ETH has been lagging behind BTC in dominance. Ethereum ETFs are still pending final SEC approvals. Gas fees are down, Layer 2 adoption is up, but the market's been quiet. This whale could be seeing what others don't. A potential ETF catalyst, a rotation back into ETH from BTC, or simply a deep value setup after months of underperformance. One question remains: is this whale early, or just another cautionary tale of over-leverage in a fragile macro environment? Drop your take in the comments. Story 5. Musk wants Grok AI to rewrite human history. Elon Musk just took the AI arms race into uncharted territory again. This weekend, the XAI founder and tech provocateur announced plans to retrain Grok, his AI model, using a completely rewritten version of human history, and the kicker, Grok will rewrite it itself. We will use Grok to rewrite the entire corpus of human knowledge, adding missing info and deleting errors, Musk posted on X. Let that sink in. He's not just fine-tuning Grok, he's letting the model redefine what's true. What's the problem with current models? According to Musk, most AI models today, including OpenAI's GPT, Anthropic's Claude, and Google's Gemini, are trained on what he calls garbage, biased data, outdated facts, censored information, and unchecked historical narratives. He argues this taints the reasoning abilities of modern AI, making them politically skewed, factually unreliable, or just plain wrong. So his solution? Use Grok 3.5's upcoming advanced reasoning engine to filter, revise, and correct the entire dataset, then retrain Grok on that. In short, Grok becomes both student and teacher. It learns from history, rewrites it, and then relearns it on Musk's terms. Tool or thought police? This move has serious implications. Musk wants Grok to act as a kind of decentralized editorial authority, cutting through the bias of mainstream sources and surfacing what he sees as the real truth. But here's the question nobody's asking: who decides what's wrong in the current corpus of knowledge? And more importantly, what if Musk's truth becomes the dominant one? Critics are already warning that this could lead to centralized narrative control under the guise of objectivity, amplification of Musk's ideological leanings, and even AI-powered revisionism masquerading as fact-checking. Because when AI stops simply reporting information and starts redefining history, we've crossed from technology into something much deeper: epistemological warfare. But what's in it for crypto and tech degens? This isn't just a philosophical issue. There are huge real-world implications for anyone in crypto, finance, and emerging tech. Data sovereignty matters. If you can't trust the dataset, you can't trust the model. Musk's move opens the door for alternative AI narratives, especially in finance and geopolitics, where existing models may reflect establishment bias. AI x blockchain synergy. Some are speculating this push could lead to decentralized knowledge repositories, powered by blockchain where data edits are logged, verified, and open-sourced. AI arms race just escalated. If Grok can truly retrain on a curated dataset that outperforms GPT or Claude in reasoning, it could shift the competitive landscape and funnel even more capital into XAI and Musk-led ventures. Final thought. Whether you love Musk or loathe him, this move is bold and deeply disruptive. He's not just challenging OpenAI or Google, he's challenging the very idea of who gets to define truth in the age of intelligent machines. So here's your question for the comments. If you had an AI powerful enough to rewrite human knowledge, would you trust it? Or is this how digital Orwellianism begins? Let us know what your inner Degen thinks. That wraps up this week's Degens Journal. From billion-dollar BTC moves to AI rewriting history, crypto is evolving fast, and the lines between money, tech, and power are getting blurrier by the day. Here's your question of the week. Would you rather hold 1 BTC or 10 shares of a BTC treasury company for the next 5 years? Drop your answer in the comments, we read them all. And of course, like, subscribe, and smash that bell so you don't miss the next briefing. We're here daily with what really matters, no hype, no noise. Stay sharp, stay Degen.